Hey everyone, and welcome back to The Deal Spill. Are you ready for another deep dive with news unpacked? Today, we're tackling a real head spinner, the Trump White House's sudden crypto obsession. We've got a stack of articles here, all buzzing about this first ever crypto summit, and talk of a national crypto strategic reserve. Imagine the US government holding 5% of all Bitcoin. What does that even mean for the future of money?
It's a fascinating turn of events, especially considering the previous administration's more cautious approach to digital assets. This is the first time a sitting U.S. president is formally engaging with the crypto industry, signaling a potential sea change in policy.
Right, it feels like we've gone from 0 to 100 in the blink of an eye. One of the articles here highlights this shift, contrasting the Biden administration's focus on regulating crypto with the Trump White House's push for a new regulatory compact. I'm curious to hear your take on this. What does a new regulatory compact actually entail? And what could it mean for everyday investors like our viewers?
It's a bit of a vague term, but it seems to point towards a more hands-off approach to regulation, possibly aiming to attract crypto businesses and investment to the U.S. The summit itself, with its exclusive guest list of just 25 industry leaders, seems to be the first step in shaping this new landscape.
Okay, so let's dive into this summit. We've got some insider info here about the four main areas they tackled: regulatory clarity, tax reform, banking access for crypto companies, and of course this massive crypto strategic reserve. Let's break them down one by one. First up, regulatory clarity. Crypto folks have been begging for clearer guidelines for years. Is this summit finally delivering the goods?
One of the key debates revolves around whether crypto assets should be classified as securities under the SEC or commodities under the CFTC. This distinction has huge implications for taxation and investor protection. The summit seems to be leaning towards the commodity classification, which could signal a lighter regulatory touch.
That makes sense, considering the administration's overall pro-crypto stance. But wait, the article mentioned something about stablecoins and DeFi too. Those are a whole other beast, right? How do they fit into this regulatory puzzle?
You're right. Stablecoins and DeFi present unique challenges. Stablecoins, designed to maintain a stable value pegged to a traditional asset like the US dollar, have raised concerns about systemic risk and consumer protection. DeFi, or decentralized finance, operates outside traditional financial systems, making it difficult to regulate with existing frameworks. The summit seems to acknowledge these complexities, suggesting a need for tailored regulations rather than a one-size-fits-all approach.
So is this new approach going to attract a crypto gold rush to the US? Or is it all just hype? This report here claims industry leaders are predicting a massive economic boom. We're talking repatriating offshore crypto capital and creating hundreds of thousands of new jobs. What's your take up?
While the potential for economic benefits is certainly there, I'd approach those claims with a healthy dose of skepticism. Remember, the crypto market is still relatively young and volatile. Overly optimistic projections often ignore the inherent risks involved.
Okay, fair enough. Let's move on to the next big topic. Tax reform. Crypto investors have been clamoring for a break on capital gains taxes for a while now. Is this summit hinting at any potential changes?
There's definitely a push from the industry for tax policies that encourage long-term crypto holdings. One idea being floated is a zero capital gains tax for assets held longer than a certain period, similar to the treatment of traditional investments like stocks.
That would be a game changer for a lot of people. But what about the government's perspective? Wouldn't this mean less tax revenue for the Treasury?
That's the trade-off, isn't it? The government needs to weigh the potential benefits of stimulating crypto investment against the potential loss of tax revenue. It's a delicate balancing act. And the final outcome will depend on a lot of political wrangling.
Speaking of politics, one of the articles points out that a significant percentage of summit attendees were actually donors to Trump's campaign. That raises some eyebrows, doesn't it? Could this whole summit be just a way to benefit his cronies?
The potential for conflicts of interest is certainly something to keep in mind. It's important to scrutinize the proposed policies and ensure they benefit the broader economy, not just a select few. Transparency and accountability will be crucial to maintain public trust in this evolving regulatory landscape.
All right, let's shift gears and tackle the elephant in the room. The proposed crypto strategic reserve. The White House wants to hold 5% of all Bitcoin, Ethereum, and even smaller cryptocurrencies like XRP, Solana, and Cardano. It sounds like a pretty ambitious plan.
It's certainly an unprecedented move. The rationale seems to be that holding a reserve of cryptocurrencies will give the U.S. more leverage in the global financial system, particularly as digital assets become more prevalent.
So it's kind of like the strategic oil reserves, but for crypto. But oil is a physical commodity, while crypto is purely digital. How do you even stockpile something that only exists in the digital realm?
That's a good question. The logistics of acquiring and managing such a vast and diverse portfolio of cryptocurrencies are complex. It's not like storing barrels of oil in underground caverns.
And how would this reserve be funded? We're talking billions of dollars here. Where's that money coming from?
The administration is proposing a combination of funding sources. They're looking to utilize assets seized from past crypto-related criminal activity, such as the Silk Road and FTX cases. Additionally, they're considering allocating funds directly from the Treasury for new purchases.
That's quite the shopping list. But wouldn't tapping into the Treasury require congressional approval? That seems like a long shot. Given the current political climate,
You're right. Securing congressional approval for such a large expenditure, especially for something as novel and controversial as a crypto reserve, is a major hurdle. There's likely to be significant pushback from lawmakers who are skeptical of cryptocurrencies or concerned about the risks involved.
and speaking of risks, one of the articles highlights the potential for market manipulation. If the government becomes a major buyer of crypto, wouldn't that artificially inflate prices? Could this create a bubble that ultimately hurts everyday investors?
That's a valid concern. The government's entry into the crypto market could create a distortion, pushing prices up beyond their true value. This could lead to a speculative bubble, and when bubbles burst, it's often the average investors who get burned.
And let's not forget the potential conflicts of interest. David Sachs, who's spearheading this whole crypto initiative, has a history of investing in Solana. Wouldn't that raise some red flags?
The potential for conflicts of interest is certainly something to watch closely. It's crucial for policymakers to act with transparency and integrity, to ensure that any decisions regarding the crypto strategic reserve are made in the best interests of the country, not for personal gain.
Okay, so we've got this ambitious crypto strategic reserve. But it seems like there are some major hurdles to overcome. Funding, congressional approval, market manipulation, conflicts of interest. It's a pretty tangled web. What are your overall thoughts on this plan? Is it a smart move to secure the U.S.'s place in the future of finance? Or a reckless gamble with taxpayer money?
It's a bold and potentially risky move, with the potential for both significant rewards and significant consequences. Whether it turns out to be a stroke of genius or a major blunder remains to be seen. It all depends on how carefully the administration navigates the complexities of the crypto market and the political landscape.
It's definitely a story that's going to keep unfolding. Stay tuned for part 2 of this deep dive, where we'll explore the potential economic and political implications of this crypto gamble.
It's interesting to consider the potential impact on the global financial landscape. We've got this article here comparing the proposed crypto reserve to China's digital yuan. Could a crypto-backed digital dollar challenge China's ambitions for global financial dominance?
That's a great point. The digital yuan has been gaining traction, and some experts see it as a potential threat to the U.S. dollar's status as the world's reserve currency. Could this crypto play be a way for the U.S. to fight back?
It's certainly a possibility. A crypto-backed dollar could potentially offer faster, cheaper, and more transparent international transactions, attracting users and businesses worldwide. However, it's not just about technology. The U.S. would need to convince other countries to adopt this new system and trust its stability.
So it's a geopolitical chess match, with U.S. trying to make a strategic move to stay ahead of the game. But what about the potential economic implications here at home? Could a crypto-backed dollar, combined with these proposed regulatory changes, actually boost the U.S. economy?
There's a lot of speculation about the potential benefits. Some proponents argue that a crypto-friendly environment could attract investment, spur innovation, and create new jobs, particularly in the tech sector. They point to cities like Miami, which has positioned itself as a crypto hub, as an example of this potential growth.
Right, I've seen those headlines about Miami becoming the crypto capital of the U.S., but some critics are calling this whole crypto push a reckless gamble, saying it could destabilize the financial system and lead to another bubble. What's your take on that?
There are definitely risks involved. The crypto market is still relatively young and volatile, and excessive speculation could lead to inflated valuations. And a painful crash, remember the dot-com bubble, we don't want to repeat history.
That's a sobering thought. And wouldn't government involvement in the crypto market potentially distort things further?
Absolutely. If the government becomes a major player in the market, it could create a moral hazard, where investors take on more risk because they believe the government will bail them out if things go south. That could lead to even more reckless behavior and ultimately make a crash even worse.
Okay, so we've got potential benefits, but also Significant risks. It's like walking a tightrope. This article here dives into the political calculus behind this crypto push. It suggests that the Trump administration is trying to appeal to specific demographics, like younger voters
Yeah.
and libertarian-leaning tech donors. What do you think about that?
It's definitely a savvy political move. Younger generations are more likely to be involved in crypto. And by embracing this technology, the administration can signal that they're in touch with these voters' interests. And let's not forget the influence of wealthy tech donors who see crypto as the future of finance and are pushing for policies that benefit their investments.
It's interesting how crypto has become this political football, caught between different ideologies and interests. But let's zoom out for a moment and look at the global picture. How are other countries reacting to this U.S. crypto surge?
The EU is accelerating its own crypto regulations, likely trying to strike a balance between encouraging innovation and protecting investors. They're also wary of falling behind the U.S. in this rapidly evolving space. And in Asia, we're seeing countries like Singapore and South Korea making significant investments in blockchain technology and positioning themselves as crypto-friendly hubs.
So it's like a global crypto arms race, with everyone trying to grab a piece of the pie. Where do you see this all heading? Will the U.S. maintain its dominance in the financial world? Or could it be overtaken by these emerging crypto powers?
It's still too early to say for sure. The U.S. has a lot of advantages: a strong financial system, a robust tech sector, and a history of innovation. But it also faces challenges: political gridlock, regulatory uncertainty, and a potential backlash against government intervention in the crypto market. The choices made in the coming months and years will determine whether the U.S. leads the way in the crypto revolution or gets left behind.
It's a fascinating and uncertain time. We've got this potential paradigm shift in finance, with the U.S. making a bold move to embrace crypto. But there are huge risks involved, and the stakes are incredibly high. It's a story that will continue to unfold, and we'll be here to break it down for you every step of the way, it really feels like. We're at a crossroads. On one hand, you've got this potential for the U.S. to solidify its position as a global leader in this new crypto-driven financial world.
Exactly, and that tension is playing out in the reactions we're seeing from other countries. The EU, for instance, is taking a more cautious approach, prioritizing regulatory clarity and consumer protection. They seem to be watching closely to see how the U.S. experiment plays out before making any drastic moves themselves.
It's almost like they're saying, go ahead, America, you first. We'll see how it goes. But then you've got countries like Singapore, which are going all in on crypto, creating these regulatory sandboxes to attract businesses and investment.
It's a fascinating dynamic. You've got this mix of excitement and apprehension, and each country is trying to find its own path. In this uncharted territory, the real question is, who's going to come out on top? Will it be the countries that embrace crypto wholeheartedly, or the ones that take a more measured approach?
That's the billion-dollar question, isn't it?
Yeah.
And for our viewers who are trying to make sense of all this, what's the key takeaway? What should they be paying attention to as this crypto saga unfolds?
I think the most important thing is to stay informed and be aware of the risks involved. Crypto is a powerful technology with the potential to transform the financial system, but it's also incredibly volatile and speculative. Don't get caught up in the hype. Do your research. Understand the potential downsides and invest responsibly.
That's great advice. And remember, this is just the beginning of the story. The crypto landscape is constantly evolving, and we'll be here to help you navigate the twists and turns. Thanks for joining us on this deep dive into the world of crypto. And be sure to check out our other episodes of News Unpacked, where we break down the biggest stories shaping the future.